this video I will talk about Wayfair, I will check their presentation, make some prediction about the future, and definitely I will try to make a prediction about the share price. Plus, I think in the end of this video you will be able to value stocks like this super easy. It is a fresh investor presentation, first quarter 2022, 25 million active customers, 23,000 suppliers, 18,000 employees and 3,000 engineers, and from my point of view it is a little bit too much. Shopping for the home is different. Home shopping is browse based, not search based, and it is when you just trying to find something interesting for your house, but without a specific words like to buy a kitchen or something like this. Customers value individuality and have an emotional connection to their homes. The home category is largely unbranded and very fragmented, but with this segment you need tailored delivery. The home category will exceed $1 trillion by 2030 across North America and Western Europe, and now you can see Wayfair 2021 is only $14 billion. Wayfair is on a path to be significantly larger as e-commerce penetration raises, and we continue to gain share through an omnichannel strategy. Now you can see that they have only 20% US home category, and maybe when they will receive 50%, their profit margin will be 10%. 23,000 suppliers, and no one reached more than 2% in Wayfair revenue. I think it is awesome. Household brand status in 3 of our 4 markets, 82% in the United States, 85% in Canada, 77% in the United Kingdom. Wayfair for luxury, mass and economy, plus they have some other niched brands, and I think it is good for marketing strategy. Our local customer base is expanding. Wayfair.com orders from customers with 3+ lifetime purchase from 30% in 2015 to 63% in 2021, and I think they still have room to grow. Shopping experience, merchandising, marketing, operations, supplier service, and it is quite too hard to replicate because you need to hire lots of engineers, and it is definitely not cheap. I really like some unique features like product visualization, or close to unique features, 124 house brands, and it is awesome for some SEO tools. Data-driven marketing grows our customer base, drives repeat and maximize lifetime value. And it is awesome in 2021, 41 billion messages, 152 billion ad impressions and 4 billion site up visits. They have their own logistic network, and it works quite good. Plus Castlegate, it is just a big warehouses for fulfillment. And it's quite interesting because Amazon don't like big stuff on their warehouses, and maybe it is better to use Wayfair. End-to-end logistics, from my point of view, it is a competitive advantage versus other companies. And on this slide you can see key financial highlights. $13.2 billion LTM revenue, 38% CAGR since IPO, 28% LTM non-GAAP gross margin, and profitable if we are talking about EBITDA, $295 million or 2.2% of revenue. Super light model or inventory model, 0.6% in inventory as a percent of net revenue. It is extremely light model. 2.4% capex, and significant cash cushion, $2 billion. Really a nice chart, and you can see this jump from 9.1 to 14.1. They have some profits from a global situation. Plus you can see some timeline for 240 niche websites, platform development, then Wayfair brand launched, then UK, Denmark. We're building customer loyalty and gaining share of wallet. 76% of orders from repeat customers. Financial results for 2021, and here you can see revised long-term view, and we, I think, need only this number, 10% at adjusted EBITDA, and also I think they are working very well, and their predictions are quite good. Now we know that it is a low margin business, and I think maximum net profit margin will be 10%, and it means that we are using this side of this table. Revenue growth rate 10%, and that means we need price to sales maybe 1 to actually tenfold our money in 12 years, and in my model I will use price to sales 1. Here you can see it, price to sales 1, CAGR 10%, and I think CAGR 10% it is the highest number for this company, and actually green line quite close to real price. And actually you can see that it was possible to maybe buy it somewhere here for 40% profit, then definitely on March 2020, and again 300% profit. Now we have something like this, and we can expect 99% profit if everything will be okay. But you can see that average price to sales 1.4, maybe this stock can grow a little bit higher, maybe somewhere here. From my point of view, it is definitely interesting company, but from the other side, I don't know how long we can stay here. And now I have a little bit better stocks to buy and hold. That is why I will come back to this stock a little bit later.